Every morning, the countdown begins for the markets with meticulous research and analysis designed to help you capitalize on the trading day. Beaming live from the CNBC-TV18 Motilal Oswal studio.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC-TV18 Motilal Oswal studios. I'm Prashant with me, my colleague Surabhi and Nigel. Guys, hi, good morning.
Hi, morning guys. So it's all getting real close to Friday. It's Song from our times. It's getting hot in here, right?
Yeah.
That's what I'm thinking of because it's with Trump.
Yeah.
It's finally beginning to get real from these tariff headlines.
Absolutely. And I think he's demonstrated that he is at least doing some of what he said he will do.
It's not all bark.
Yeah.
It is some bite.
It is some bite. Maybe more bite is coming, unfortunately. So let's just take it from the top, right? And I think the news flow is coming in thick and fast. And now, of course, we're getting to the point where it is not about what they will do, what I will do in the future. It is about what I'm doing now. And I think in that sense, the 25% tariffs, if you're just sort of tuning in to news and have not been on social media, etc., I mean, this is the big story. President Trump announces a 25% tariff on all cars which are not made in the US, all imported passenger vehicles, and key auto parts as well. I mean, there is a list of everything which is included. And by the way, the order which he has signed also gives him the powers to expand the scope of these tariffs to include more things, more components and such. So, I mean, engines, transmissions, powertrain parts, electrical components are some of the auto parts which are included. But as I said, they could be expanded. The scope could be expanded in that sense. These tariffs, the 25% tariffs, go into effect on the 2nd of April. And I think in that press conference, President Trump was asked whether these tariffs will stay for the full 4-year term, and the answer was yes. So, I think that's by the way, 50% of everything which the US consumers buy in terms of passenger vehicles is made outside of the US. So this is going to be this is going to impact, and we'll get to stocks and specific implications for companies here in India as we go along, because there are implications here as well. Now, equities, as far as broader indices are concerned, took a dive. S&P was down about 1.25%. The Nasdaq was down about 2%. In terms of the big macro markets, the 10-year yield was up 3 basis points, small, but they're creeping higher. The dollar index now, I think 6 days now, it's broadly been up 104.55 as we get closer to the 2nd of April deadline, and its tariffs go higher. Brent oil prices, again, about $74, about 1% higher. You had, in terms of data, US durable goods numbers, which were solid. CNBC, and we'll sort of, go across to our colleague who reported this story, this was source-based, but they reported that non-tariff trade barriers would not be included in calculating reciprocal tariffs. This, at the margin, is good news. This essentially are, VAT, things like, their assessment of how much a country is undervaluing their currency, etc., etc. So these are non-tariff barriers. So if the tariff reciprocity is X, these things would have been X plus something. And they're saying, well, it perhaps will not be included when countries are handed over a number. The same story goes on to say, although I think this is also important, decision, I'm quoting from the story, decision will be made on a case-by-case basis. But I think, if they include VAT, it's especially for regions like Europe, etc., it's very, very negative. So we'll see. The Financial Times reported that EU officials are expecting a 20% tariff imposed. And we'll see. I mean, here in India, generally the broader sort of consensus number is around 10% additional imposition on Indian goods going into the US. By the way, you had a Fed officials weighing in on the entire transitory 2.0 narrative. What is this narrative? It is basically, after the FOMC meeting, the comment which was used by Jerome Powell that, some of these things, inflation caused by tariffs, are transitory. We will look through them. And that kind of cemented the view that maybe the Fed will cut irrespective of tariff hikes, etc. But there was some pushback, so some dissent as well. We'll need to watch closely, because this will affect Fed pricing for the year. Tariff noise will continue into the 2nd of April deadline. Huge range of possible scenarios. I think we've been highlighting that day after day. And which brings us to the markets here. I would say this. I mean, I think it's a good thing that the markets are selling off a little bit going into the 2nd of April, the reciprocal tariffs day. Otherwise, I mean, if you'd kind of sort of slept through and sleepwalked right into 2nd of April, you would have completely underpriced that risk that tariffs perhaps will go up and maybe it'll be even more negative than what the consensus is expecting. So here in India, around the region, in the US, there is a little bit of a risk off which has happened, which I think is not necessarily a bad thing. We've been flagging this off for a while. So markets sold off sharply, and I think the sell-off accelerated in the last 60 minutes. I'll just put out the levels. You got to look at supports. I mean, on the upside, you basically take out the recent high for the Nifty, the Bank Nifty, that's an immediate resistance, and then we can look at higher levels. But support's more important. They come in at 23,396. That's the nearest support, 40 hourly exponential moving average, and then 23,288. These are two numbers. On the Nifty Bank, we got a second straight lower close. And yesterday morning, I was asking if the Nifty Bank has completed something, because yesterday we ended, day before yesterday, we ended lower. Yesterday, we ended lower. So we also, by the way, broke below the 20 hourly average. Here, the support is the 40 hourly exponential average, which is 50,856. And then the next one is 50,641. So that's a broad setup. And of course, the levels to watch out for. Lots of focus on auto components, etc. GIFT Nifty indicating about an 8.5% lower start. Sirbi.
Auto, and all auto is down across Asia this morning as well. And those markets are feeling the heat already. But by the way, I mean, just beyond auto, it was also tech that was down big time in the US. Wall Street was lower. Nvidia yesterday fell 6%. And there's a lot of chatter between, the whole AI and, models that are coming out of China versus the US. There were brokers talking about how some of the US models are better. But the fact is it was risk off. And therefore, even tech was falling big time yesterday in the US. Now, by the way, how are the auto reactions playing out in terms of prices? US automaker stocks all are down in after hours trading. So if you're looking at Stellantis, if you're looking at GM, Ford, these stocks are down between 4 to 6%. Asian automakers this morning, and particularly the ones in Korea and in Japan, now whether it's Mitsubishi, Mazda, Nissan, Honda, Kia Motors in South Korea, all of these stocks are down between 2% and as much as 6%. Mitsubishi is right now down 6%. So clearly now this reality is beginning to get priced in. By the way, so what is the weighted average tariff right now? And this is just one part of it. This is just the auto leg. We get the full picture, as they say, perhaps on the 2nd of April. So the weighted average tariffs have moved from 2.5% at the end of December to about 8% right now in the US. Barclays put out a note yesterday saying that they feel that by the time all this is finally and fully through, weighted average tariff for the US is going to be 15% plus. So that was one estimate that was there in the market yesterday. Markets across Asia, let's get the indices themselves up for you. Well, like I said, most of them are down. Japan is down about 1%. Korea is down 1%. The Hang Seng is kind of bucking the trend for the time being, but that's the outlier market. Otherwise, the region is under pressure. There's no denying that. Speaking of the Hang Seng, a quick data point from China. Industrial profits came down 0.3%. This is in the Jan-Feb period, clubbed together because of the Lunar New Year holiday. It's not new. This number, industrial profits out of China, has been weak for several years, for several months, and that weakness has persisted in the latest print as well. By the way, the dollar, of course, in general was slightly higher. It's continuing to march above 104 because of course, all the tariff sort of uncertainty, plus the fact that the durable goods number in the US was slightly better than estimated, was not as weak. Let's watch for that. The yen continues to be under pressure in Asia as the dollar is broadly higher. Now, the Nifty broke the 7-day winning streak yesterday. It was a very wide sell-off across market capitalization, across sectors, which is a fact. But the fund flow picture is still good and the corporate news flow picture is still good. I want to highlight on the positives as well. Let's talk about the fund flows. 2,200 crores of buying once again looked very, very good. Yesterday, for a change, DIIs weren't on the sell side. They were also buyers. So the total flows picture was quite solid yesterday. The corporate news flow. So yes, all the global tariff headlines are very negative. We know that. But the local corporate news flow is good. Just an example of what I'm talking about. Order flows are coming in. Deal wins are coming in. Wipro has backed a large deal. 500 million pounds is what they're talking about. It's from a UK-based company. We'll talk about that. NBCC. Remember yesterday, a couple of these order win stocks were doing very, very well. Today, it might be NBCC. They've announced an order win which is worth 25,000 crores over a 3-year period. It's with the Maharashtra entity. So watch out for this stock. Defense stocks, more headlines. Bharat Forge, 6,900 crores of contracts for, and also Tata Advanced Systems, of course, together, for artillery guns, for mobility vehicles. So defense stocks continue to be in focus. And if you need a cherry on the cake in terms of good corporate news flow, then there is BSE. I mean, they're going to be issuing bonus shares very, very soon. So I guess, Nigel, yes, the global headlines are wobbly, markets are a little uncertain, but local corporate news flow, order wins, all look strong.
Well, and it's the expiry day as well.
Yes.
And after a while, the bulls will feel, well, we are back in the game, because we had 5 straight series where you saw that the bears dominated. And this series, the bulls, they have made a comeback. So for this series itself, getting into expiry day, the bulls will be feeling good because the index is up close to around 4% or thereabouts. Those are all the losing series that we had. In fact, in the October series, we were down more than 5% or thereabouts. So we're making a comeback after a while. The bulls will be feeling good. If you look at the Troika, the dollar index, Brent crude prices, and the 10-year yield, well, all of them have perked up a little bit from the recent lows. But the good news for us is the FI flows have returned. In 5 sessions, you get 20,000 crores. What more can you ask for? Month to date, still they're sellers to the tune of close to around 4,500 crores odd. But the FIs are showing us the money. And that's going to be very, very good news, because that was, a big negative in the last many, many months. Moving to the rollover picture, the Nifty rollovers, more or less in line with what we have seen. The Bank Nifty rollovers, that's much higher than what we have seen. So getting into the expiry day, Nifty bank rollovers, a lot of it did take place in the last couple of trading sessions itself. And that was close to around 69%. To give you a reference number, it was sub 60% in the previous series as well. Moving to the FIs, what do? They lighten some positions. They covered some shorts. They unwound some longs as well, though they continue to remain net short with close to around 66% of their positions on the short side. Getting to the levels then, just punch in those levels, because we're looking at the options data, and that's how things are stacked up. So there was writing being seen at around the 23,500 call, 23,600 call as well. But on the downside, the 23,400 put was fairly active. And the premium out there is close to around 40 rupees. On the upside, the 23,600 call had close to around 50 rupees. So punching in these data points, you'll get the broad levels that you're looking at. We ended closer to around the 100 DMA. That's the broad range you're looking at for expiry day itself. Going by the options data and going by the reference levels, these are the important levels. You're expecting expiry to be in this range. If the Nifty needs to fight back today, I think the Nifty bank needs to play a role. The rollovers are relatively higher, and these are the crucial support zones. The 200 DMA and the 100 DMA, these become the important reference zones on the downside. And given that tech has got into a bit of a tizzy yet again, the Nifty bank will have to do bulk of the heavy lifting. What are the stocks I'm looking at in today's trading session? Trent. That stock was relatively stronger in yesterday's trading session. It was showing good strength, even when the markets did fall apart. And in yesterday's trade, it crossed the 20 DMA. Now all eyes on whether or not it can get closer to around the 50 DMA. In the near term, the sense you get is after the sharp correction we've seen on Trent, maybe it could do a relative outperformance. So that's one. And the other 2 stocks I'm looking at is Zomato as well as Jio Financial. There's that nifty semi-annual rejig that will take place. So keep an eye out on these stocks, particularly towards the end of trade. That's the rough inflow that we could see. So keep an eye out on these names.
Okay, all right. So plenty to track. And apart from the global headlines, a lot of internal cues, which are actually not that bad. Let's start up with the equity call of the morning then. Rhythm Desai of Morgan Stanley expects growth data to improve, the RBI to get more dovish, and an earnings beat in the upcoming earnings season. According to him, the most crucial cues would be global, including US policy and growth rates. A global recession or near a recession would be challenging their bullish call and keep equities off the highs in 2025.
All right, well, we have Seth Freeman, Senior Managing Director at Glass Rancher Advisory and Capital Group LLC. Seth, great to have you. I dare say in a new avatar, at least I'm speaking with you in your new role. Remember speaking with you at least, a decade ago. But good to speak to you again. So, Seth, tell us, what are you making of these sort of tariff threats and the tariff imposition as well? Our markets, simple question is, are markets underpricing the risk still? Because many are saying that this is still a negotiation. This is still all can be, one can get out of it one way or the other. So markets should not worry too much. What's your sense, Seth?
I think markets, I think consumers, I think politicians should be very concerned. This is new territory to use tariffs like this, and the on again, off again, the delays, the changing of the terms is very disruptive for the markets, and it's very disruptive for business people to do planning.
Yeah, absolutely, Seth. I mean, and I think that's coming out in several surveys as well, that the uncertainty is what's really bothering companies and consumers alike. So, Seth, the question is that now this is auto. Now we'll get the full picture only on the 2nd of April. Do you expect it to be very disruptive? Or do you think that, this will be, the final numbers will be announced within, say, 2-3 days, and then at least the world can start moving on? Both businesses and markets, they can start sort of dealing with it.
I don't think we're going to know until the afternoon of the 1st what's really going to happen. It's just so unpredictable, and we have a lot of other instability in the world besides using automobiles and auto parts as leverage for some other kind of concession. The auto market in the U.S. is under a lot of pressure already without having tariffs that could significantly increase prices. And our firm is very active, actually, in dealing with distressed auto dealers here in the United States. And this can't be good for them.
Hi, Seth. Plenty of uncertainty with regard to what President Trump is going to do next. But what's your view on the Indian markets? We preempted some of this. We underperformed, actually, for a good 5 months or so. And off late, we have coming back into the game. And in fact, we've done a recent outperformance, actually. Your view on the Indian markets, growth is here. Some of the bad news is in the price because our markets have come off the top. What's your approach on the Indian markets?
Well, I still view, India and the Indian market as a very long-term growth story. And it's not going to, as we all know, over the last 20 years, it doesn't happen in a straight line. And just like here, once in a while, the regulators want to impose some new rules, which is disruptive to the market. I remember, when certain taxes were imposed, I don't know, it seems like 15 years ago now, or 10 years ago. And that was disruptive to FIIs. But the market's changed so much. I realize you've had some good performance in the last couple of weeks, but the problem is money flows, and investors don't like uncertainty, number one. But on the other hand, frankly, the level of trade between the United States and India is relatively small. So maybe, I always thought it was bad politically going back to the 2005, 2010 period when India was buying a lot of turbines from China. And so maybe you'll see some pressure from about buying cheap Russian oil and infrastructure from China.
All right, Seth, we'll leave it there. Thank you very much. Quick comments and good insights. Speak to you again soon. Well, let's just go across to our CNBC correspondent, Eamon Havers, who essentially reported yesterday that, in the calculation of reciprocal tariffs for country by country, it's possible that non-tariff measures like VAT, etc., may not be included. At the margin, may be a good thing. Let's go across.
The president, speaking to Newsmax yesterday, said in terms of the April 2nd tariffs next week, he's inclined to be more lenient than reciprocal, because if he is too reciprocal, then that could be too tough on people. So I talked to a White House official this morning to figure out what exactly that means, more lenient than reciprocal. And what I'm told here at the White House today, Carl, is that what the president is signaling here is that he is not going to take into account all the non-tariff barriers that countries raise against the United States. Remember, early on in this debate, the White House said that they would include things like a VAT tax, wage suppression, currency manipulation, those kinds of things in their calculation of a tariff attack on the United States, and therefore that would be part of the reciprocal tariff back. Now what I'm told is that they're signaling they may not go all the way to including all of those non-tariff barriers in determining what the reciprocal tariff rate should be country by country. How are they going to decide that? I'm told it's more or less going to be on a case-by-case basis, but what they're signaling is that a lot of the stuff they said they would calculate against, they may not actually calculate against. So it is a sort of lessening of the severity of the potential tariffs that we're talking about based on what they had said before. Now, there were a lot of critics who said, as our Megan Costello points out, that some of these non-tariff barriers should never have been included in a discussion of tariffs. Nonetheless, the White House signaling today they might not go all the way in including some of those non-tariff barriers next week.
We're going to charge countries for doing business in our country and taking our jobs, taking our wealth, taking a lot of things that they've been taking over the years. They've taken so much out of our country, friend and foe, and frankly, friend has been oftentimes much worse than foe. And this is very modest. And what we're going to be doing is a 25% tariff on all cars that are not made in the United States. If they're made in the United States, there's absolutely no tariff. We start off with a 2.5% base, which is what we were at, and we go to 25%.
I guess it's never been more colorful or more interesting, right? Because the week started with flexible, then we came to lenient, and then he said lenient but reciprocal, but not sure how much reciprocal. And in between all these words, lenient, flexible, reciprocal, finally you get 25%. So
no, I know, that's what I was saying, right? It's a good thing that the market is weakening going into it. It's better to go in a little weak and then rally after, rather than going into it saying nothing will happen and then you're painfully finding out that maybe things are happening and it's tougher than what one thought. But it's a story with a huge range of possible outcomes, right? I mean, what may happen and how it'll be affected, etc. And I don't think anyone really has a handle. We'll let's quickly tell you what's lined up here over the next 2.5 hours or so in terms of interactions. 8:35, Amit Anwani of PL Group will join in, and we talk about the defense space. And of course, I mean, the stocks have had a decent rally from the lows. 9 o'clock, you'll have the analyst from BNP Paribas, Priyankar Biswas, to talk about the big order win from L&T. I think it's the biggest ever, sort of in that sense. Siemens demerger perhaps also in focus. Lawrence Belanco is our market guest, and he'll talk price action and technicals and where we stand now. 9:30, the management of Suzlon joins us. 9:40, we'll talk about tariffs, etc. Sunil Kaur of Goldman Sachs will be joining for that conversation and the broader way to think about these. Ashok Leyland management, the board meet yesterday and the outcome, which Sud will outline in a bit from now. The Shenu Agarwal at 9:50. Towards the end, it's the economy. Lata will be in conversation with Ajay Srivastava on, of course, what else but from tariffs.
Well, it's time to slip into a short break. Got a lot of stock-specific action to track for you. Get to that in just a bit in our special Top 10 segment. For the time being, give you a sneak peek into the list. Wipro, Infosys, HUL, Maruti, BSC. All of them will be reacting to positive news flow overnight, while we have 5 on the negative side. Tata Motors, Samudra Motherson, Max Financial, JB Pharma, as well as Ashok Leyland. Stay with us. We'll get into further detail on all of those names.
Welcome back. So once again, let's pull up some of the Asian markets. Most are still down between 0.5% to about 1%. There you go. Taiwan's down a little more than 1%. Japan, Korea are the ones that are really reeling under pressure. The Hong Kong market is a bit of an outlier. This morning, let's look at the GIFT Nifty as well. Get the implied open back up on the screen, because otherwise Asia is fairly cautious. Flat. That's the opening that we are expecting for the time being. Now, there are going to be lots and lots of stocks to watch as well, not just because of the the overnight tariff news, but our local news flow here as well has been very strong. So let's straight away get to our list of top stocks to watch this morning. Guys, good morning to all of you. So Darshan, you have to sort of lead this, right? It's all about these auto tariffs. Now, tell us the India implications.
Good morning, Surabhi. So once again, all these auto companies will be in focus, and on the back of tariff announcement made by US President Donald Trump, he has announced that he'll be imposing 25% tariffs on all the cars that are not made in the US and also on the auto parts. And this tariff will be effective April 2. So what all companies will be in focus, especially Indian companies? 2 companies that I feel that will be in focus are Tata Motors and Samvardhana Motherson. First up, why Tata Motors? Because US is a key market for Jaguar Land Land Rover, and it's the key contributor to Tata Motors' total sales. And North America forms nearly 1/3 of the total sales of JLR. And the important point is JLR does not have any production facility in the US. So all the JLR cars that come in the US, basically that are sold in the US, are imported from UK or other countries. Why Samvardhana Motherson will be in focus? Because it generates nearly 20% of its revenue from the US. But the important point is it supplies parts to those companies which export to the US. So those companies, if they are impacted indirectly, it will impact Samvardhana Motherson, and that's the reason these two companies I'm going with red.
All right, so thank you very much for that. We'll try and get some more perspective. We'll try to reach out to the companies, and we'll put them on the air and ask them what their perspective, etc. As well. Well, let's talk about Wipro and Infosys, which are in focus as well. Rima is here to tell us why. Rima, morning.
Hi, good morning. So let me start with Wipro, and the reason is they won a mega deal. $500 million pound, that's about $645 US, spread over 10 years with UK's Phoenix Group, which is an insurance company. So assuming the deal is entirely net new, it's about $645 million over 10 years, so about $65 million in incremental revenues every year, and that roughly translates into about 0.6% of the company's annual revenue as of FY25. Remember, TCS already has a long-standing deal with Phoenix Group, and the understanding is both TCS and Wipro will now be, providing services to Phoenix Group. So it's not that this Wipro deal has come at the expense of TCS. Infi is the other one that we're watching because the company has got a tax refund of 2,949 crore for prior years' tax assessment for the years 2016, 2017 and 2019, 2020. And that's quite sizable because this amount of nearly 2,950 crore, according to analysts, amounts to about 10% of the company's expected profitability for this year. Back to you.
Okay, all right. Thanks a lot for that, Rima. Well, Mangalam joins us to tell us about HUL. Morning, Mangalam.
Good morning. So, in FMCG companies, one of the bigger changes happens when there is a leadership change. And in HUL, the food business has a new leader in the form of Rajneet Kohli. Remember, a couple of weeks ago, Britannia put out a press release saying that their CEO, Rajneet Kohli, has stepped down to pursue external opportunities. And this, now we know, is the external opportunity where he joins as the executive director of HUL Foods division, which is an important division for the company itself. The current, leader out there has moved on to pursue other external opportunities as well. Rajneet has 28 years of experience in, Jubilant Foodworks in Britannia. He's been with Coca-Cola as well as Asian Paints. And having had the opportunity to speak to him over the last 5 years as well, seems like it's a good choice made by HUL. What's also interesting is one of the first few lateral hires that we've seen in HUL at a leadership position. Usually the company promotes internal talent itself. So this will be a very interesting one to track. My sense is we see mild green in HUL because of the credentials that Rajneet brings to the table.
Okay, looking good then for HUL from the leadership changes perspective. Thanks for that, Mangalam. Let's now put the spotlight on Max Financial. I think we have Vivek joining in. Vivek, what's the news?
Well, that's right. Max Financial, again, a block deal over here. We picked up the term sheet last evening. And what we understand is that the promoter, Max Ventures, is looking to sell up to 1.59 or 1.6% stake in the company via the block deal. In fact, sources tell our colleague Nimesh that this particular block deal may happen in the pre-open window itself. What is the price at which this particular block is likely to happen? It's not a discount, less than a 1% discount. So 1,112 to 1,117 is the range that this particular block has been set at. The total size of the block will be in excess of 600 crores. So now remember, Max Ventures held close to 3.22% stake in the company at the end of the December quarter. It will be interesting to see whether the stock can recover post the block deal once it happens.
Okay, all right. Thanks a lot for that, Vivek. Let's go back to Sudarshan. There's news flow coming in on Maruti Suzuki, Ashok Leyland, as well as BSCA. Sudarshan, take it away.
So we'll start with Ashok Leyland. Here there are two announcements. First, company has announced that it has begun the process to close the manufacturing and assembly unit of Switch UK. So this might be taken positively as this was basically a drag on overall the business of Switch Mobility, that is Switch India and Switch UK. So closure of that unit will be taken positively. But the news that can be taken negatively is promoter has created pledge on 30 crore shares, and if you calculate its CMP, its value is coming at more than rupees 6,400 crore. For Maruti, the news is board has approved appointment of Sunil Kakkar to the board, and it's the first time that an Indian employee is added to the board, and he is currently additional director and whole-time director of corporate planning. For BSC, is going to consider the bonus issue on March 30th. Last time the company had considered bonus issue was in 2022, and that was for 2-for-1, in the ratio of 2-for-1.
Okay, all right, got it. So thanks very much for that. So a couple of other stocks in news as well. Vinny is tracking JB Pharma. There's a deal brewing here, Vinny?
Absolutely. We're expecting a deal coming in here, a block deal that has been launched by JB Chemical and Pharma. Here, the seller is Tao Investments Holding Private Limited. This is a subsidiary, wholly owned subsidiary of KKR. Now, we had spoken about it before as well, that KKR is looking to sell stake. So, this is a part of the stake that they're looking to sell. As of now, the offer price is at 1,625 rupees per share, which is at a discount of almost 5% to yesterday's closing price. Block size is 10.2% of the equity stake that they are holding is what they'll be looking to sell, which is worth around 2,576 crore rupees. So as of December, Tao Investments was holding 53.6% stake in the company. Now they're looking to sell 10.2%, so we'll see that reduction coming in there. And the lockup period is around 90 days on further sale of shares that we're watching out for. So important to keep an eye out on JB Pharma. We could expect to see some red on the screen.
Okay, all right. Thanks a lot for that, Vinny. Well, here's a quick recap of all the top stocks that we just covered for you. The ones with positive news flow include Wipro, Infosys, HUL, Maruti, as well as BSE. While stocks with negative news flow include Tata Motors, Samvardhana Motherson, Max Financial, JB Pharma, and Ashok Leyland. That's about all the equity stocks that we're talking about. But for the time being, Manisha Gupta joins us to give us a complete roundup of what's going on in the commodity markets overnight. Morning, Manisha.
It's actually started with a day of gains for many of these commodities. I'll start with the crude oil prices, which are trading at a 4-week highs, and this is on the back of U.S. Threatening to put 25% on all imports from Venezuela in sense of crude oil. Apart from that, it also is about U.S. sanctions on Iran oils. Markets also are reacting to the U.S. inventories declining by more than what they were anticipating at 3.3 million barrels. So all of these factors clearly have been supportive. The support also continues for copper prices, especially for COMEX, where we are yet again trading at an all-time highs. And with the kind of overnight gains that we have seen, COMEX copper is up by 32% for this year right now. But the markets are putting in a word of caution because we've seen the prices gain up too much, too soon, a lot of sentiment there. And even if we are looking at reciprocal tariffs coming in slightly lower than what the street is heated about, you could be looking at some profit taking onto this one. But the markets tell you that it is buy on dips for many of these metals, looking at the supply disruptions and the demand expectations going forward. A quick word on gold prices, and there also have been some gains here. Well, it is all about the tariff concerns, the slowdown potential concerns, which is supporting the gold prices, with most banks and brokerages now telling you that you're perhaps looking at prices much higher from where they are right now, with the forecast coming in anywhere between $3,100 to $3,300 per ounce for this year itself. By the way, the markets will now watch out for the U.S. Fed official speeches, and there are 4 of them slated before this weekend.
Oh, yeah, absolutely. Copper is a new gold, but then, hey, gold is not going out of favor, it seems, anytime soon. Both those metals have been doing exceedingly well. Thank you for that, Manisha. We will take a very quick break. Come back on the other side. We'll have Deepan Mehta joining in. We'll discuss, of course, some of these tariff headlines, the auto space, and more with him in just a bit.
Welcome back. Hope you're having a good morning. Well, we have listed down all the top stocks with the fundamental news that's come in overnight. We have Deepan Mehta, Director at Elixir Equities, who joins us on the show. Hi, Deepan. Good morning. Good to see you, Vin. Trump's in focus again. He's going after the auto companies now. He's saying these taxes are for real. We're going to put in tariffs both on imports on autos as well as on auto components. Not great news for a couple of stocks. How do you see things panning out, both for the top two that we're looking at, Tata Motors as well as Sambandana Motherson?
Yeah, Nigel, good morning and thank you for having me on your show. See, I'm not so much concerned about Motherson Sumi, I forget the new name, because a lot of the manufacturing plants also are there in US and that has been their strategy, but it could have a sentimental effect on them. And of course, Tata Motors, because of JLR, that certainly is a market where they may be slightly at an uncompetitive position. But largely, it has got discounted, I think, Tata Motors valuation as well as the stock price movement of Motherson also. So from that point of view, I don't think it has a broader impact on the market per se.
But Deepan, so I don't know, I mean, if you're, would you, first of all, two-part question, would you expect any further dips on these stocks, whether it's Uno Minda, Sona BLW, Bharat Forge, but anyone who has anything to do with the US market? And if yes, then would you be buying the dip on any of these names, including Tata Motors?
This will be on the whole, no, our view on automobiles is a bit neutral because domestic sales also are kind of flattening out. So from that point of view, I think investors should get cautious. And now this is an additional uncertainty relating to a lot of auto ancillaries which may be exporting to US. And mind you, I don't think there are too many exporters to US from India. A lot of the companies you named are very strong exporting to Europe and other markets. So from that point of view, I don't think this particular event may have such a negative effect on the earnings of these companies. But on the whole, the Indian domestic market also is kind of slowing down and stagnating, as we may see from the March quarter, the March month volume figures when they are out in April. So I would say a little bit cautious on the entire sector as a whole and look for opportunities elsewhere.
Deepan, good morning. Your thoughts on the market itself? I mean, still at the margin, even though market Bank Nifty rallied about 4,000 points from the lows, the Nifty was up almost 1,900 points from the lows. I mean, there is still skepticism whether it'll be able to sustain the gains and whether this is still a constructive, broadly constructive kind of environment. Just wanted your thoughts, Deepan.
Prashant, one sentence or one proverb that comes to mind is bull markets climb the walls of worries. And there are always worries going to be around, but yet I think the worst seems to be over. And if the March earnings season and market and management commentary is positive, I think we'll have a situation where we'll have higher tops and higher bottoms. And then every correction is a good opportunity to buy into stocks. By and large, I think liquidity is coming back into the market. After many, many months, we are seeing on several days the FI positions are positive. Large cap stocks are getting interest amongst investors. We saw block deals taking place in Kotak, HDFC Bank as well. So gradually, I think certainly the picture has changed from what we saw in the months from September to February. And I'm pretty optimistic that markets can build on these gains going forward. But as I said, there should be no fresh bad news. And the March earnings season should be generally positive.
Indeed, Deepan, one was waiting for that dip and suddenly the markets took off. People are now waiting for the second dip. If that doesn't come about, and if you have the foreign flows that are strong, then in fact we could see a good amount of a bounce even from these levels. But let's see how that goes. No more fresh negative news. That's a key trigger to track as well. Deepan, requesting you to stay with us. We want to focus on a couple of other names. Yesterday we had two stocks that were doing very, very well. HAL, owing to the deliveries coming in from GE. And the other one was Siemens, because the demerger is moving along at the current pace. We have with us Mr. Amit Anwani, the research analyst at PL Capital Group, who joins us on the show. Hi, Amit. Good morning. Good to see you in, and thanks a lot for joining in. Well, the first engine has come in for GE. That's good news for HAL, because that will help them in terms of execution from here on. But with the stock running up 25-28% in the last 1 month or so, has it run its course or good for more?
Sure. Morning, Nigel. So I think the first engine delivery definitely is a positive sign, though the HL is missed on numbers. We're expecting at least 4 to 5 deliveries in FY25, and management has been guiding upward of 15, 16 deliveries in FY26. But having said that, I think the restoration of supply will definitely give us be FY26. I was factoring almost 8 to 10 deliveries for FY26. And if all the 12 engines comes, it is slightly better on that count. Having said that, currently with the current rally, the stock has went up from 27x 2-year forward for my multiple to almost 33, 34x. And relatively speaking, I think, as I have been highlighting in our previous discussion, this is a long-term growth CAGR, which we have been talking about 12-13%. If supply chain is going to be normal in subsequent years. So I think in the past, the stock has traded 45x. The street was giving 45x. There could be more headrooms when the deliveries comes back, which we're expecting. And on a longer term basis, definitely the story continues with HL. Yeah.
Amit, sorry, could you just repeat that valuation? Where it is now, what was the peak valuation, and what is the realistic multiple that you think HL can once again go back to?
Right. So peak, I think the stock went up more than 5,000 rupees, and it was almost 50x target multiple. Even the street was getting a few names. So on an average, I think about 45, 50x. It came down 40-50% from the top to 27x, and I think the current rally, on my numbers at least, this is trading at about 33-34x.
And that's the question. Can the multiple again re-rate back to 45 times? Or do you not see those levels coming again? I mean, what would the recommendation be?
See, 40x is possible. And we did compare this stock with the other emerging market players and developed players, including Lockheed Martin, Raytheon, the similar kind of the revenues and similar kind of return on equities. All these stocks are trading at about 23, 25x forward, and being the premium markets and the kind of decadal growth which we are expecting with HL, this might continue to be at premium versus these global players where this growth is still lesser.
Sure. Okay, so
40x.
So 40. Okay, so that's HL. Just a slight shift on the other piece of news as well, and then we get your broader views on Siemens as well. I mean, yesterday the demerger has finally been approved by the NCLT. The market's getting very excited again. And it's going to be one more share. If I'm a Siemens shareholder, I get one more share of the energy business. What sort of value unlocking are you pricing in?
Right. So I think the energy business is contributing almost 30% of the top line. The EBIT margin is between 14-15%. So my working, if I split the two businesses, Siemens Energy and Exop Energy business, Siemens Energy will be more comparable to Hitachi Energy, which is trading at 1.5 year forward, I would say 80x consensus. Siemens Energy, on my number, when I split it out, I think it's trading at almost 55x. So there's a gap between these two companies. And there could be a valuation catch-up which can happen with respect to Siemens Energy. And also, the macros are very strong for Siemens Energy, which caters to the GIS substations, power transformers, and a lot more related to T&D, including the HVDC part. So that way, I think between the two pieces, the Siemens Energy, which is more comparable to Hitachi in that sense, not completely, there could be valuation catch-up. Siemens Exop Energy, which is more comparable to ABB India, I think the valuations are almost 60x or similar to ABB India. So I think in that even the relative growth versus Siemens Energy piece is slightly slow. So I think there could be catch-up with Siemens Energy piece. Energy. Yeah.
But Amit, you're talking about Siemens Energy is trading at 55 times. That is not cheap in itself. I mean, has Hitachi at 80, 85 times? I mean, I just wanted your view out there.
So that's why I said relative. But if you see overall space, I was checking the 10-year forward, the 10-year averages of forward multiples. ABB used to trade at 45-50x 2-year forward, even in the history. This is pre-merger, which happened in 2019. So definitely valuations are expensive in some pockets, but I don't think this will be trading, all these stocks will be trading below 45, below 50 in any case.
I mean, I think they've been 45, 50 times, I think, what, decade and a half now, right? I mean, yeah, so always expensive, especially these industrial names, MNC names. Amit, so just to go back to defense, a couple of questions. It's interesting what you said, because increasingly, by the way, have you looked at institutional foreign ownership in these defense names? Is there a decent amount of ownership? Because defense is coming up as a big theme globally. You know, own defense names as a geopolitical hedge. You know, are these well owned amongst foreign institutional investors, or you think it's only just about starting now? What's your sense?
I think that's something which is quite interesting. If you see HAL and all, the government has been doing OFSs, and the government ownership came down after the IPO. But the space like shipbuilding, still the government ownership is quite high. Institutional ownerships are low in the stocks like MDL and a few other stocks. Definitely relative to the other PSU packs, the institutional ownership is a challenge, and we can't rule out going forward as BEL, where the government ownership is only 51%. There could be many long-term stocks where the story is there. The government might reduce their stake, but institutional ownership and at least more than half of the stock is quite low. Yeah.
There is no implication for the space from defense, right? It's a high value sector. And one of the ways where we can kind of placate the Trump administration is by buying more stuff from the US, especially on defense, because it's all high value stuff. But does it at all in any way impact the sort of Make in India story in that sense?
So I think there has been news that the European defense spending could benefit, but I have a slightly different view. I don't think in near term this is going to benefit the Indian companies. If you see exports, so two things are happening. Obviously, we are trying to strongly set up the foundation for the localization of defense and setting up the vendor base, and there's a lot of modernization plan. And on export, we wanted to go to 35,000 in next 2 years, and then 50,000 in next 5 years. I think major export which is happening is subsystems and few of the electronic warfare systems, the mounted guns, and artillery. There's a few areas where the export is happening, and we are capable of to some extent. And this is also happening to the 3 to 4 countries, including US, Armenia, and I think Europe is very small pie. So for me, I think the benefit, near-term benefit, would be limited. I don't see too much.
My question was more about whether this buy. I mean, if they say, well, buy more from us, will that hurt localization efforts? That was my question.
See, if they're focusing on OEM, the OEM players in, let's say, Europe and US, there could be some buying which can happen in intermediate products, which includes defense electronics. But I think it will take time. It is not next 1 or 2 years.
And of course, I mean, at least in terms of what makes headlines, it is the big stuff, right? The airplanes and the...
but the last has not been said on that, right? I think it's still up for negotiation, because there was a lot of pushback by a lot of Indian players saying that this is not something that we should just be buying blindly.
That morning we had the management of Zen Technologies with us, and they said
Mr. Atluri.
that, was it F-35s?
C-35, I think. Was it the F-35? Okay.
And they said, well, but, you know, yeah, absolutely. It's still, I think, up in the air. Thank you very much, Amit. We'll continue this conversation as we go along. Appreciate your time. We come back with some technical trading ideas. Okay, welcome back. 9 minutes to go for the pre-open session. Mitesh and Sudarshan are with us with what they'd want you to do as far as trades are concerned. Gentlemen, good morning. Good to have both of you here. It's kind of, in a way, I was saying this in the morning that thankfully the market is correcting a little bit and not sleepwalking straight into 2nd April. But where are things now? I mean, yesterday the sell-off accelerated towards the end, right? Mitesh, what are levels and what would one do? No, I think you. Sorry, go on.
Yeah, one question. So, a couple of things. One, the market had run up so fast that some kind of pullback was possible. Now, very difficult to time exact hour when it starts. But once you have the idea that there's a pullback going on, you can then look at the short-term averages, retracements, gaps, any other pivots which are there. And I think Nifty, to me, and my understanding, 23,400, 380 is a very critical zone. I don't think it will break. I'm not saying, there will be a trend reversal in case Nifty starts trading below that. But I think there should be a very good, strong support area. And therefore, we are right there, actually. We're just about 80, 100 points away from that. So, to me, to my understanding, the pain which could happen for the next couple of days is limited to about 100 odd points. And then I think we should make one more attempt towards 23,780, 800 zone. Maybe clear it, but at least an attempt towards the earlier highs is very likely. So in that sense, trading with long buys is what I recommend.
Okay, trading with long buys is what you'd recommend. Sudarshan, what about you? What would your broad take be?
Yeah, good morning. Well, yesterday was a disappointment. The market refused to oblige me. The idea was that we'll buy on a dip, and that dip accelerated, as you said, became literally a deep decline in the afternoon. Now, my stops were 23,300, and those stops have not been hit. But the market is not giving a sense of comfort. When today is a difficult day, we have weekly expiry, we have monthly expiry, and we have a financial year expiry. And things can happen unusually, not just in options, but also in futures. So my suggestion for the day is, if you still want to be in a trade, you have to be long with a stop under 23,300. Otherwise, the best trade is to step aside, watch the markets do whatever they want today and tomorrow, and re-enter on April in the next week.
Okay, all right. So it's going to be choppy and turbulent perhaps next couple of sessions. Gentlemen, good morning. Let's talk about stocks as well. Mitesh, what are you going with today?
Good morning, Subir. In line with my idea that the broader directional bias is on the upside, I have all buy calls. A buy on LNT with a stop at 3,400 for targets of 35.35. A buy on Power Finance Corporation with a stop at 404 for targets of 430. Gas Authority or GAIL India is a buy with a stop at 170 for targets of 182. And HCL Tech is a buy. Keep a stop at 1616, look for targets of 1670.
And Sudarshan, what about you? Which are the stocks today?
Well, I have a mix, and that reflects my sense of uncertainty or stepping aside. Marico is a buy, at least it's a safe stock, all the defensives, with a stop under 627, Marico, and then Ashok Leyland, which I heard is being discussed on the channel just now. That's a buying opportunity. Keep it as a positional buy rather than an intraday buy. It's with a stop under 210. I have Zomato as an intraday short, stop above 208. And finally, Hindalco as another intraday short, with a stop above 704. So I have two buys and two sells and a sense of confusion.
That's well put, Sudarshan. And yeah, absolutely, it is confusing with everything which is going on, at least in the near term. Thank you very much, gentlemen, both of you. With about 5 minutes to go for the pre-open session to kick off, and we'll chat again for your trades. The Max Financial block deal has gone through, as Nimesh was telling us yesterday. 35.8 lakh shares. That's about 1.03% equity. Changed hands, 399 crores worth. The price is 1,112 rupees per share. Well, we'll take a quick commercial break here. We come back with the pre-open. Of course, also the analyst from BNP Paribas. We'll talk about the big L&T order win and maybe check on a view on Siemens as well. Stay tuned.
Welcome back. We're just about 2-3 minutes away from the pre-open rates and bracing for what would probably be a bit of a cautious start. That's the large trade in Max, which our team was alerting you on earlier. And we'll, of course, get to know the buyer and seller's identity only later in the day. But the sense was that this could be a promoter selling a little bit of stake today. That's Max Financial in the news. Deepan is still with us. Deepan, okay, since I was talking about Max Financial, let's talk about the financials here, particularly some of the insurance names, which have really come back in the limelight. Anything that you're picking?
This would be, I think these are great long-term stocks and they provide stability in the portfolio. But in times like this, when the overall market is reviving, I think it's better to go for high growth stocks and some of the beaten down stars of the previous bull phase. So I would just be a bit cautious. So I would remain equal weight on insurance. But one very good way to play the insurance would be through something like a PB FinTech, which is an insurance portal. And now some of the concerns surrounding their healthcare venture, they seem to have subsided. So it's a better way to play the insurance sector and gives a complete exposure to that particular industry. So that would be our preference.
Okay. Also, yesterday's big star, Deepan, Siemens. We were just discussing it with the analyst as well, with this demerger now finally in motion. What is your call on the stock? Would you buy it with, obviously, to get the benefit of the energy business? How would you approach it?
Yeah, so we always, whenever there's a split like this, we have seen that there's a 5-10% value unlocking which does take place, and the present consolidated is slightly cheaper than when they are trading separately. So yes, I think you could have a trading opportunity over there. But from a longer term perspective, I don't know, because the valuations are extremely rich. And the stock also, in terms of performance, has delivered very well over the last 4 or 5 years. So P multiples also have shot up. So from that point of view, you want to be a bit cautious. But, if you're holding Siemens shares, just because the valuation has gone up, I wouldn't sell. But from a fresh investment, I think there are better choices within the capital goods space or even the engineering construction space.
All right, Deepan, very quickly, what about BSE? I was at the exchange, had a chat with Mr. Ramamurthy a few days ago, and now they surprised the street with a corporate action. They're going to consider a bonus. What's your view on the stock? It's come off drastically from the recent peak. Your view now?
Yeah, Nigel, I think it'll improve the sentiment, but I want to wait for a correction and buy at perhaps lower P multiples.
Okay, all right. And throwing a couple of more to you, Zomato and Jio Financial Services, both of them will be in focus because of that nifty rejig that will take place. Your view on both these two names? There could be some flows that will come in towards the end of trade.
I think Zomato is for long-term investors, and if you don't have exposure to that particular space of food delivery and quick commerce, then this correction is a good opportunity to get into Zomato, but you have to have a 3 to 5 year type of a view. Jio Finance I would avoid. I think there are better plays in the NBFC financials than Jio Finance. A bit disappointed with the scale-up which has taken place over there.
Deepan, another space is the gas stocks, right? So IGL, MGL, relatively cheaper compared to historical averages. Take a look at Petronet, for example. Only come up 10-15% from the lows. Any thoughts?
Yeah, Prashant, you're right, but there's no growth over there. And, a lot of shifting has taken place towards EV, especially on public transportation side. So that can act as a dampener as far as long-term demand is concerned. And these are basically utility companies. And with the economy reviving, stock market reviving, you want to go for small mid-cap stocks with high growth potential rather than safe stocks or defensive stocks like the gas companies.
By the way, the pre-open is coming up on your screen. Of course, the GIFT Nifty was weirdly unchanged. But the pre-open down 200 in the Nifty. I don't know. I don't think that perhaps it'll settle down. It's just the first 1 minute of trade, and we'll give it some more time. And we'll look at stocks, etc. in a bit from now. Maybe 2-3 minutes later, we'll start looking at individual names. Deepan, any thoughts on a name like Indus Tower?
Yeah, Prashant, first, a disclosure, we and our clients are invested and generally positive on that entire space. But, with Starlink coming in and now most of the capex and rollout of 5G over and done with as far as Bharti is concerned, and also the positive fallout of Vodafone, kind of remaining solvent and, going from strength to strength. So that risk factor also has come off in IndusInd. But look, the stock price has also rallied significantly. So I would say that, existing investors like us, we're remaining invested, but from a fresh investment perspective, I would say there are better choices.
All right. What about Ashok Leyland? What's the view out there? You know, plenty of buzz yesterday. Are they going to do some inorganic growth? That was something that the street was working. Then they were wondering, is it something to do with IndusInd Bank? At least as of now, it was neither. They're closing that European part of their business, which was loss-making, which in turn will be a positive. However, that IndusInd group, since they're part of the same group, could be a bit of an overhang on the stock. How do you view the stock, Ashok Leyland?
No, Nigel, generally positive on Ashok Leyland, and we are seeing them steadily increase market share. The new products have received good response, and they're giving tough competition to the market leaders. And certainly, this particular development is positive for Ashok Leyland. Valuations are reasonable, and should the economy overall pick up, logistics and transportation pick up, it will benefit Ashok Leyland. As also the fact that if the RBI goes in for interest rate cuts, that may also provide a boost to Ashok Leyland, and then there could be some regulatory changes as far as scrapping is concerned. So very positive on Ashok Leyland from a risk-return profile. And if there is any dampener because of these particular development, maybe a good opportunity for long-term investors.
I think that is weighing on the stock, actually, that additional pledge, that the promoters are taking on the shares that they have. So for the time being, the street is taking, bigger focus on that rather than the closing down of the European subsidiary. And that is weighing on it. That was always the risk when IndusInd Bank itself had, fallen. We had highlighted that in various shows as well, that could be a risk. And it seems, as of now, Ashok Leyland is under pressure because of the promoter pledge on the shares that they have. Yeah, absolutely. Sizable amount over there. And that's, that's something that the street is not liking at all. Now it's correcting a little bit. I mean, it's not 10%, 5-6%, now 1.5%. Let's see. Maybe it's not as severe a reaction as a 10%, but the fact is that, there is a promoter level overhang on the stock. Anyway, for the pre-open overall, now we've settled down to a cut of about 0.5%, which is about 100 odd points on the Nifty. Look at Tata Motors in the pre-open, straight away 4% on the lower side over here. In fact, you should check out some of the other stocks as well. Samvardhana is down about 3 odd percent. Let's pull up some of the other names as well. Maybe we can get a Sona BLW and Uno Minda, some of the component makers that also have exposure to the US. Most of these stocks are starting on the lower side because of the tariff issue. Aside of that, HDFC Bank, TCS, some of the other biggies, they're also exerting pressure on the downside. Wipro's won a large deal. Wipro's up about 1% or so. Deepan, before we let you go, within the large cap space, aside of financials, I mean, IT, I know you've been very circumspect and you don't like the fact that there's hardly any growth. What about, say, a stock like L&T, anything else, large caps, where you're willing to put fresh money to work?
Banks and L&T, I think.
Okay, I picked both the spots correct then, banks and L&T for you. And L&T's, yeah.
Those are the only two sectors or companies where there is still growth which is higher than the nominal GDP growth rate, and valuations are reasonable. So I would go, if you want to create a portfolio, the core holdings have to be the large cap banks. Could be PSU bank like SBI and maybe an L&T, and then even a Bharti Airtel. Otherwise, it's getting very, very difficult to find large cap stocks which have got sustainable growth momentum of at least double digit within that particular category. So I would say these 3-4 companies have a good risk return profile. And certainly, I think you can be overweight in them. As a disclosure, we and our clients are invested in all of these large cap stocks I just spoke about.
All right, Deepan, thanks very much. Good to get your perspective as always. And since we started talking about L&T, let's take the conversation forward because there was favorable news flow around the company yesterday. The company has backed its largest contract ever from Qatar Energy for offshore hydrocarbon business. BNP Paribas then came out with a note. They quite like the L&T story. They have an outperformed rating on the stock. We have Priyankar Biswas, India Analyst Industrials, Logistics and Metals with us. Priyankar, thanks very much for joining in. So it's a big win, right? 15,000 crores of an order win. How does it play into the overall ordering activity as the year is closing out? But in terms of ordering, I don't think L&T has disappointed anyone. It's just a question of better margins, better execution. Your thoughts, and why are you overweight on the stock?
Yes, thanks for all the relevant questions. In fact, I do recall having this conversation with you guys in earlier episodes as well. So the concern on L&T had typically been like literally for the last 4 quarters that the order inflows won't come. That is what the whole issue was, that the 10% growth that they guided won't come. Now, what you highlighted as a 15,000 crores order, I would say it's more closer to USD 4 billion. So something probably higher than 30,000 crores is what we are speaking about. So that itself takes this year's order inflow based on whatever I estimated to 15% plus rather than what the management has guided at 10%. So clearly the strength is very much there. And what we are saying and what we had put out in the note is that there is not going to be a capex slowdown specifically in Middle East in both CY25 and CY26. And we have put out that the tender pipeline as it prevails today is actually far higher than what it was prevailing at the same time last year. So just to put in comparison, like 235 billion of tender pipeline in Middle East right now versus something like 194 billion. So there is still a lot of growth that we are speaking of. No oil-linked related slowdown is supposed to happen.
All right, that was the fear, right, Priyanka? The recent narrative is that oil price can weaken, so it will impact Middle East capex. But you're not in that camp. You're saying that the Middle East capex is a secular upswing, regardless of oil prices. Are we getting that correct?
Yes, right. So if you look at it, let's say from a pre-COVID level, the theory that you were saying used to hold true. That I agree. But if you look at it for the last 3-4 years, Middle East capex is already at its peak, despite the oil price hovering around USD 75. One must note that. So the Saudis and the UAE are going for economic diversification, and that is where they have given published tender pipelines. And not all of these are funded by the government specifically. So they are funded by the sovereign wealth funds also. So it's guaranteed funding projects. So unlikely that the order inflows will slow anytime soon in the next year or the year after that. That is how I'll put it.
Priyanka, your target price, I think, on the stock is 4435. So you're seeing fresh highs. I mean, for L&T, the highest, I think, point was just around 4,000. Then the market corrected. Stock cooled off as well. What will drive L&T to that level? You mentioned the order book growth. I mean, this year has been fabulous. It'll end at 15%. In terms of, like I said, revenue and margins, are you penciling in any margin expansion to drive this kind of a stock price performance? And what about the top line growth for FY26?
See, the FY26 top line growth is actually underpinned by the order book that is already present. So there won't be much uncertainty on that end. That is how I'll put it. But yes, there are margin uncertainties. And what I will say is, yes, we are expecting the margins to move up. So this year, let's say we have an expectation of a margin of the core EBITDA margin around 8.3. Next year, we are building it around 8.6. Now, our assessment is based on the fact that, do recall, in 2023, L&T won some very large Saudi Aramco projects. That was sometime in mid of 2023. Now, this should cross the margin recognition threshold in this calendar year. And that is what will drive up the margins. So the energy project margins are somewhere at peak execution around 10%. And if you see a 10% margin projects getting up into the mix versus a 8.3 at an overall, so the natural maths says that the margin expands. So we are building in that. And the other factor that drives in is like, look, L&T's working capital levels are at 12%. Now, one may think that it cannot come down from here, but our view is it can come down to somewhere close to 10.5, 11 as well, because there has been some water-related overdues. And once that comes in, so that is where you will have the working capital levels coming down further. And who knows, because of such large cash flows, you may eventually have large payouts as well. And that can drive the thing up.
Priyanka, good morning. What are the other stocks under your coverage?
So we do look at, let's say, Cummins, AIA, and of course, the logistics space.
Okay. Any screaming buys from those areas?
See, we have been quite positive, I would put it that way, on, let's say, JSW Infra. That is a stock that I have been consistently pushing for some time. Because I feel that while the multiples looks optically high, but one must consider that the amount of growth that is happening. So, for example, like you will probably have 21 billion rupees of EBITDA now. And in FY 28 to 30, that can jump to anywhere between 90 to 100 billion. So if you consider that, I mean, the level of growth that you have there, I don't think there are a lot of stocks which give you that sort of a growth with absolutely a clean balance sheet. So that is one strong buy for us.
JSW Infra is a strong buy for BNP. Priyanka, thank you very much. And keep coming back. We'll talk more in terms of other ideas, etc. as well. Appreciate your time here this morning on CNBC. Well, there's about 3 minutes to go for the market open. Let's get 9-10 calls, maybe 9-12 calls now, I should rephrase. Mitesh, what do you have?
Go with the buy on L&T for targets of 35.35.
We were just talking about that. Sudarshan, what about you?
Well, Marico, consider buying Marico with a stop under 627.
Okay. All right, gentlemen, thank you very much for that. Marico and L&T are the sort of calls coming through from Smitesh and Sudarshan. Trent is the next one we want to focus on. Stock actually did well yesterday, at least till mid-afternoon, maybe came off a little bit after that. Mangalam is here with more details. Mangalam.
Well, it's one of those stocks, which had been storied, had seen a big decline, and at lower levels, people are trying to find value here and, move around on that. So Macquarie this morning has written on Trend. They've initiated coverage with a target price of 7,000 rupees. What they say is it's a play on India's rising discretionary spend in fashion. They've, done analysis across all the Asian retailers, and they've said that Trend has the best retailing metrics in Asia when it comes to growth, return profile, and inventory turns as well. Add to that, they have the integrated backend, which allows quicker fashion-forward style drops, and new stores, which the company is putting through the franchise route, will also aid their return profile. So after the decline that we've seen, there's no worries about the story of the company going forward. The only question was all on valuations. Now that there has been a bit of a decline, the street believes that maybe this is a space to buy right now. Macquarie for sure has initiated coverage, a target of 7,000 rupees.
All right. Thanks very much, Mangalam, for that. So that is the view coming in on Trend. There was a 40% decline from the highs, and I think from the lows, maybe things have picked up a little bit now. And I think Macquarie, I saw something from Goldman as well a couple of days back coming through in terms of sort of overall industry perspective, Zudio, etc. 0.75% higher on Trend. Let's just quickly look at what the Nifty is left off with the pre-open, at least 53 points lower. So that's more like it. We'll just quickly run through the rates as they come up, and then we'll do stocks as we always do. So it's going to be slightly lower, mildly lower. 23,435 first rate, 23,400, about 1/3% down. Nifty Bank is down about 0.14, 0.15. 51,180 or so is where that is at. Actually, it's almost flat. The Nifty Bank doing better than the Nifty. The small cap index is down 1/3%. And I think you'll have the mid-cap index, which will come up on your screen, is down about 0.45, 51,405 on the Nifty mid-cap index. So that's the screen and the rates which are coming through. The Nifty heat map will give you a sense of how we are starting. But it's all about stocks this morning with auto comps, etc. in focus. You've got more down than up. And just about 15 names are higher, and the rest of the 35, 36 names are lower this morning.
And it's auto along the way. And the worst stock that's hit, and which is very sort of directly hit, is obviously Tata Motors, because of whatever imports that are going into the US from Jaguar and Land Rover, wherever those plants might be. But the fact is that once those cars are coming in, it's 25% tariff, as it's become very clear. So Tata Motors is a big casualty. There's a bit of a sentiment rub-off on Bajaj Auto and M&M. These are completely sort of inward-facing companies, and their export markets, for instance, Bajaj Auto are, Nigeria, etc., and Latin America. So they're not impacted by what's going on in the US. But sentiment rub-off, yes, slightly on the lower side. Eicher Motors also down about 1.5% at this point.
The tariffs, I think, only passenger cars.
Light trucks and passenger cars along with components.
Yeah, but I don't think two-wheelers, I'm not sure. I mean, yeah.
I'm saying that they don't have exposure. I mean, Bajaj is not exporting anyway to the US too much. Their markets are Latin America, Nigeria primarily. But there's a bit of a sort of sentiment rub-off on the downside. Maruti, of course, is in focus because of the boardroom changes, the first ever Indian getting appointed, but stocks, of course, down about 0.5% at this point in time. By the way, let's look at Ashok Leyland because of this overhang issue on the promoter pledge, 4% down on that stock as well, since we're talking about autos. So aside of autos, IndusInd Bank is lower by about 2%. Sun Pharma, Dr. Reddy's, there's some selling in pharma names as well. HCL Tech is down about 0.6%. It's not too bad actually for the Nifty. Let's talk about the winners then. What's keeping it up on the other side? Wipro, big order win announcement coming through, 1.5% up. L&T, we were just discussing that stock with our experts, 1% higher over there. Trent, because of that initiation brokerage report, 1.5% up there. Today, some of the big boys are supporting Reliance, ICICI Bank. These stocks right now on the positive side of the screen. But yeah, for the time being, Nifty is still lower by 40 points.
Well, that's right. From the broader markets, though, plenty of stocks are calling for attention. Some of them are Madison, as you said, 6.5% down. So now BLW, that stock is down. But remember, the management had joined us. They said they had a plant in Mexico and they were supplying in Mexico. So they believe that they would not be hit. For the time being, the stock is down close to around 5% or thereabouts. Other couple of, auto ancillary companies, like a Balkrishna Industries has lost close to around 4%. So keep an eye out on that one. Mid-size IT companies as well are getting hit. You have KPIT Technologies that is down 3%. Tata Elxsi as well is down close to around 2% or thereabouts. BSE, investors like what they've heard with regard to the company considering a bonus issue. For the time being, the stock is up 3.5%. So big up move is what we're seeing out there. NBCC is up close to around 3% and PB Fintech up close to around 1.5%. Good recovery is what we're seeing from the lows on the Nifty itself. Now it's down only around 30 points or thereabouts. And as we mentioned earlier today as well, Trent could be a stock you should be focusing on. Yesterday had good price action. You have the initiating coverage as well. And they've added fair number of stores in this year so far. So I think the street will like that. On the flip side, you have a couple of other names that you should keep on your radar. Zomato as well as Geo Financial. Both of them will be part of the Nifty effective tomorrow. For the time being, we're seeing both those two stocks doing a relative outperformance.
Absolutely. And up on your screens now. By the way, the Nifty is completely recovered, right? I mean, we started with about a 0.25% kind of cut. We're now absolutely in the flat zone, 20-point lower, 23,467 is where we are at this point. So it's more stock specific with Tata Motors and Samvardhana Motherson and Bharat Forge, etc., which are down in varying degrees. But for the broader market, we've come up pretty smartly. We have Lawrence Belanco now joining us. He's a market master of the day. He's, of course, a much sought after view on technicals with CLSA. Lawrence, great to have you with us back on the program. Thank you for your time. Prashant here. I remember the last note you put out something called the breadth thrust it was, right? And you said, it's indicating that maybe there's a bit of an up move here. And the up move has happened. From the lows, markets have picked up smartly. Where from here, Lawrence? And is it going to be, as some have put it, W kind of a market, up and down a few times over, or have we seen the worst already?
Yeah, I mean, I think to make a short answer to the question, I think the worst is over. I mean, there were two things we were looking at. One is, in the third, fourth quarter of last year, we had this topping pattern that suggested you trade down towards a 21,800 to 22,800 zone. And that was basically the trading range that you had prior to the India elections in June of last year. We fell into that range, and the big thing that we saw last week that really sort of improved the technical landscape was, one, we broke above the 50-day, and what was different about last week's break above the 50-day versus December's break above the 50-day is that we had this breadth thrust signal, and now what that measures is the number of stocks within the Nifty making new 4-week highs. And typically when that gets above 55%, we have a really good hit rate. Looking at it on a 90 or 250-day basis, that the Nifty is up over 13%. So, that would suggest that we revisit the highs. We trade back over 26,000.
Okay, so you're seeing a move back above 26,000 perhaps, and the worst is over, Lawrence. This is sounding really good. So then what is looking the best as India kind of recoils and, goes back to those old highs? Where do you see maximum momentum building in the market?
Yeah, it's quite interesting. Late last year, we talked about the private banks over the PSU banks as a key sort of relative ratio. And, in the correction that we had from the September highs into the lows in February, that the private banks actually fell less than the PSU. So they did fall, but they fell less. And now that we've started to see things turn around, we've seen that private banks continue to outperform. So, banks have held up relative to the Nifty. That's still a leadership market since essentially the second half of last year when we started to see the improvement in the banks, but just getting more granular within that banking space, it's the private banks that really sort of stand out. You've seen breakouts in Kotak Bank after being range bound for the past 2.5 years. You've seen HDFC sort of reassert itself after its breakout, and you've seen RCRCR trade back to its all-time high. So, that's a key sort of focus area. And then you've got some of the non-financial banks like Bajaj Finance, another sort of big multi-year trading range breakouts. So that's really where the interest and momentum is right now in the Indian market.
Private banks and big financials like Bajaj Finance. Indeed, I mean, what a move Bajaj Finance has has showcased, right? Lawrence, just to go back to the numbers and to understand the time range again, over how many months, what's your time period in which you see the all-time highs come back, and what's the exact level that you would track?
Yeah, look, so I think the key message here, if we just take the average back testing of the breadth thrust signal, 250 days after you get that buy signal, the market is up 82% of the time, and the gains on average is over 13%. So, if you're looking at just taking the average and what the expected return will be, it'll be over 13% within a 250-day window.
Hi, Lawrence. Good to have you on the show. We'll get back to equities. For the time being, I wanted to focus on two asset classes, which are very, very important from an India equity market perspective. The dollar index, has it topped out? And are you looking lower levels on that one? And the other one is Brent crude prices as well. That seems to be breaking down. From an India market perspective, that's another tailwind for us. So give us levels on both these two.
Yeah, so let's look at the dollar index to start off with. December, we did see a break above the 106, 107 area. And what the significance of that, it's the upper boundary of the trading range that the dollar index traded between 2022 and 2024. What we saw basically in February is a sharp reversal in the dollar that saw the dollar index drop back into that trading range. So we've basically seen a reversal in the dollar index back into a trading range. So really more in a neutral setting, let's say from an intermediate term perspective over the next 6 months, that we stay range bound between this 100 and 106. If you take a step back and you look at the longer term charts, the dollar index has been in an uptrend since 2011. But this lower high that you've made in December relative to the September 2022 high does give you an indication that that dollar uptrend over the past 14 years is starting to top out. So the longer term profile is starting to provide us with evidence of lower highs. To confirm a major reversal in the dollar index, we still need to see a break below the 99 to 100 area. So next 6 months, look for a trading range and consolidation. On a longer term side, a break below 99 would be a major reversal of that dollar uptrend you've seen for the past 14 years.
That's interesting. Sorry, go on. Please, you want to finish that point.
Yeah, so I just wanted to touch on Brent then quickly.
Yes, please.
And then on Brent's, you're quite right. Over the past 18 months, we've seen the $70 to $71 area be quite a key support area, but every rebound that we've had off that $70 to $71 support area over the past 18 months has met selling pressure as on every rebound. So what you've had is this characteristics of selling the rallies in Brent, which builds a pressure on this 70 to 71 and ultimately suggests a break below that level. And again, from a longer term perspective, that suggests a downside target of 51 to 52 on Brent oil.
Okay, 51 to 52 on Brent oil. I got that. So interesting and sort of strong views in that sense. So Lawrence, just on that nifty point, so 13% over the next 1 year or so, right? Just going by the signal.
Yes.
Roughly. Okay, got that.
And if you wanted a shorter term time horizon, at 90 days out, average gain is 7.5%.
Okay, got that. Lawrence, what about the NASDAQ? And because, here the Nifty and the NASDAQ have been the two best performing markets and very closely correlated. Is the US market, how's the US market structure looking?
Well, it's quite interesting. If you look at year-to-date performance across asset classes, there's significant performance dispersion on a year-to-date basis. But even if you take it back to the Trump election victory back on the 5th of November 2024, and the major US indices from the Mag 7, NASDAQ, S&P, are either flat on the year or marginally negative, where China's positive, Europe's positive, and India's sort of recovered into positive territory with this recent rally off the low. So I think we are seeing major dispersion develop, and as long as the US doesn't roll over into a recession, a slowdown in the US can continue to see this performance dispersion. So I definitely wouldn't start an investment thesis with this was the correlation, because we've seen over time that correlations can break down and a lot of money can be made on a breakdown in these correlations.
Lawrence, I just want to talk about Indian IT, because the thing is that the foreign dollars have finally started flowing back into this market after a long time. You mentioned financials will definitely be big leaders. IT may not have a fundamental reason to rally, but do you see it on the charts?
So looking at the charts, unfortunately, the relatives rolled over. We're below the 200-day. The absolutes rolled over. We're below sort of key moving averages, and we also below the 2021 and 2024 highs that we set. So we basically fallen back into the trading range that you saw in the first half of 2024. So we're not really seeing any leadership from this sector. You know, the large cap names look sort of more vulnerable than some of the mid cap names. After the mid caps names obviously had significant corrections from their September highs. But yeah, it's not a leadership sector. It's not something that we're sort of pushing as an overweight, at least from a technical basis.
Okay, so not really leadership in IT. Get that point. Financials, you made that point very clear. Lawrence, a lot of the state-owned companies, they were the leaders of the market up until September of last year, right? These big stocks, the PSUs, and even other capital good companies or the MNC companies like Siemens, etc. This was the red-hot part of the market. How do you find the structures here now?
We've started to see a bit of an improvement in the infrastructure names from the PSU side. So NTPC, for example, that's had a good recovery, but we're still below the 200-day. So there's a bit more work that we need to see, to confirm that in the same way that we've seen confirmation in the banking side. So the PSU non-banking parts of that PSU index is what we focus on, but we do need to see a bit more evidence that we've got a confirmed base where we think it's more sustainable on the upside. So a bit more work needed in that space.
Lawrence, before we let you go, will India outperform from here on global markets? We've had a period of underperformance and now we're getting our mojo back. Do you think the Indian equity markets will outperform? That's point number one. And that 7% return that we've seen traditionally in the 90-day window, some part of that is already played out, the 4% that we've had in the last 1 month or so, or is it from here on do we calculate it?
Yeah, so I mean, look, you're looking at an average, right? So, each move has different speeds to how we typically see it. So yes, we could spend a period of time just going sideways and then have another 4% upside within that sort of 90-day window to get there. It's so very hard to sort of pinpoint exactly from a time frame perspective. But, the point is, and the message should be here that breadth has improved. So the participation in the rally and the break back above the 50-day is typically and historically a strong signal that while we'll get pullbacks on the way, that we should now be buying the pullback rather than selling the rallies, which has been the behavior that we've seen from September. Now, to answer the question on a long-term basis, we still got 37 to 42,000 as a longer-term upside target for the Nifty. There will be periods, where China rallies strongly and we get some outperformance from there. But, still having a long-term upside target of 37 to 42,000, I do think, India would still be a key driver for emerging markets, but also relative to the global benchmark as an outperforming market and one that you do want to be adding to exposure. And we've got, the evidence, at least now technically, that you want to be buying the pullbacks, basically.
Okay, Lawrence, good to hear your thoughts. Thanks a lot for joining in and join more often. You sounded quite bullish and optimistic today. The bulls will love it. Thanks a lot, Lawrence.
You only want the bull message, right?
No, we had a period of underperformance, Lawrence. It's good to hear a bullish thought as well. Thanks for joining in. Let's focus on the next stock, Suzlon. That's the one on our radar. Motilal Oswal, they've initiated coverage on the stock. They have an aggressive buy rating. Let's find out more about how things are shaping up from here on. We're joined by Mr. JB Chalsani, the Chief Executive Officer at Suzlon. Hi, sir. Good morning, and always good to see you in. Well, the Motilal Oswal note is quite positive on the prospects of the company. Let's talk about the industry first. Wind energy here in India is relatively underpenetrated if you compare it with the globe. And Motilal, in their note, they're saying that wind energy is expected to account for close to around 20% of India's renewable energy by 2030. Currently, I think it's low to mid-teens. Do you second that thought? Do you believe that's possible, 20% of the total RE space? And also, they're talking about India's new wind energy installations to reach around 8 gigawatt annually by FY27. Is that possible, 20% and 8 gigawatt?
Absolutely. If you look at even the projections requirement as per the CA projections itself, by 2030, 300 gigawatts is solar and 100 gigawatts is wind. So obviously in the 400 gigawatts, 100 gigawatts is wind, which is 25% of renewable energy, not counting the hydro, which is different. And as far as reaching out 8 gigawatts, I've been saying this, it is not something an unachievable task. Even if you look at FY17, we did about 5.5 gigawatts in the country, which was the highest ever achieved in the wind. that was for 2 megawatt turbines. Now every turbine is 3 megawatts and more. So if you convert that, because turbine is turbine, whether it's 2 megawatt or 3 megawatts, direction remains the same. If you convert that, even that point of time, we had a capacity of 8 gigawatts implementation capacity in 2017. So therefore, I really don't see an issue in that. There are few challenges on the ground which needs to get sorted out, and we will ramp up.
So 20% is possible as a percentage of the total mix and close to around 8 gigawatt of installations by FY27. Got that. That's with regard to the industry perspective. For your company, Mr. Chalsani, if that's the case, 8 gigawatt, and you have, I think, roughly around 40% of the market share. Motilal Oswal and they are talking about you hitting close to around 3.2 gigawatt of installations in 2027. Possible, right?
Yeah, absolutely. We are at 2.7 gigawatts of installations in the country till end of February. So I think we should cross that number as a country, the wind installations. And when you're talking about the percentage, there are two different percentages. One is our share in terms of total installed capacity in India till now. So we are number one and far ahead of everybody else at 31% market share on the installed capacity. And if you talk about the currently, what is most important for us is the order book. And if you look at calendar year 24, some repeated news that just came up with the reports. Globally, not just here, we are number 5 in terms of order book. And they also said not number 5 compared to everyone else. Switzerland is the one which has 100% firm orders. Okay. So therefore, it's not just the orders. Globally, we're number 5. And then we also have firm orders.
Okay. All right. So just to confirm, 3.2 gigawatt of installations possible by 2027. For the industry, it could be in the vicinity of around 7 to 8 gigawatt, right?
No. 3.2 gigawatts of installed capacity would reach this year, this financial year, is expected to reach.
And for Suzlon in the next 2 years, given the industry will move from around this 3.5 to around 7 to 8, as per what projections suggest, by FY27, you could do around 3.2?
No comments. We don't give a guidance in advance. You know that very well. We always have this in CNBC. Obviously, that looking at our market share, being a market leader, more important is, for us, the business scenario got changed. Earlier, it used to be completely the COD because we were doing 80% or 90% of our order book used to be EPC orders. But today, the 20% is EPC, 80% is equipment supply and parts flow. So therefore, for us, our business is how many turbines we supply. Okay, then because someone else is going to do the commissioning of those turbines. So the business slightly got changed, but we would obviously the market is going to go to that level. We would grow, but I don't want to give a number to it.
So let's talk about that. I think the order book, as of what we know, the latest numbers, end of Q3, I think was around 5.9 gigawatts. So as we start looking forward to FY26, how is the tendering activity? There are some reports indicating that maybe there's some slowdown. Earlier, the overall update was about, I think, 10 gigawatts of tendering. That's what our colleagues are telling us. And the reality has been a little lower than that. So can you tell us what's the on-ground situation?
Yes. So the first thing is that what impact the tendering has on our order book is important to understand.
Sure.
For us, if you look at our order book, what you talked about, 5.9, the simple addition of 5.5 versus subsequently whatever we announced, 60% of our current order book is coming from C&A segment, which has nothing to do with the bidding and has nothing to do with PPA. Okay, this is all for the large conglomerates for their internal consumption, whether it is JSPL or Charity Villa or Serentica. These are nothing to do with the bidding. And that's where we are number 1. And then we are a preferred the OEM for these people. So therefore, that's one segment which there is no issue. Balance 40%, 20% of that segment is coming from public sector. Okay. You know that we won NTPC single largest contract of 1.165 gigawatts. And there are more in the pipeline for NTPC. And then even other PSUs have said that they will be coming out with more and more tenders. So therefore, that segment is second segment. Third segment, 20%, is what comes to us from the bid PPAs. And every single order we have taken in that segment has a firm PPA. Only after that is what we'll take the order.
No, fair enough, sir. So it's a mix. I completely understand that it's a mix. Your direct work you're doing for different corporates, some would be competitive bidding. But a general sense, now that we are going to be looking out for FY26, how do you see your order book growing across these segments?
Yeah, our order book, in my opinion, would remain the more or less similar sort of a category. 40-50% in C&I, and PSU I expect is going to increase, and then the bid will remain at the same 20-25%. But now addressing your specific question of bidding, bidding is happening. So there were few concerns raised in the recent past about the delays from the bidding to the signing of power purchase agreements. Okay, that if you see in the last 30-45 days, there is a significant progress which is happening. So there is a sense of urgency at various levels. And we are now seeing the traction in terms of signing PPAs. You see in the last 30-45 days itself, number of PPAs have been signed. So therefore, bidding was never an issue. There's a huge amount of bidding happening, even today. Those are need to get converted into PPAs, which is what is moving now. That segment will increase significantly in FY26.
All right. Mr. Chalsani, good that you came on and spoke to us. Important last comments there. Things have picked up in terms of PPA signings, etc. last 35-40 days. We'll speak again, sir. Good luck. Thank you very much for joining us here on CNBC-TV18. We'll take a quick commercial break here. We're going to come back and we put the focus back on Trump tariffs. Sunil Kaul of Goldman Sachs will talk to us about what kind of reciprocal tariffs India and other emerging markets should expect. But the focus is very much on India in that conversation. Coming up. Okay, welcome back. April 2nd is essentially the deadline, tariff deadline for reciprocal tariffs. Now, President Trump has called it the U.S. Liberation Day, but most market participants know it as Reciprocal Tariffs Day. There have been a lot of uncertainty around tariffs. Markets remain on the tenterhook. Let's dive deeper on the tariff issue. I caught up with Sunil Kaul, Global Emerging Markets Equity Strategist at Goldman Sachs, and spoke with him about how to think about this issue, which is right upon us.
Our sense is that, look, India will be one of the many trading partners that will likely get sort of be included in the reciprocal tariffs. I think the Office of U.S. Trade and Representatives, they sought inputs from 19 of the trading partners. Out of those, 15 have trade surpluses with the U.S., which covers close to 90% of the U.S. imports, right? So India would be one of the 15 trading partners we think that could come in the reciprocal tariffs. I think if you just looked at the rate purely on the basis of product by product weighted average reciprocal tariffs, which is that if US matches sort of India's tariffs on each of the products, that effectively is about 11 percentage points of higher tariffs on India. But then I think we also have to keep in mind that the number could be a bit higher because of non-tariff measures like subsidies and import bans, and there are also kind of VAT. And so there is a lot of uncertainty whether the US does include VAT, does not include VAT. Europe is obviously a large risk there as well. So depending on what the number could be, it could be north of sort of pure 11 percentage points, which is based on the weighted average tariff rates. I think the one thing I wanted to mention in here is that our general sense is that these proposed tariff rates are intended to be sort of basis for negotiation, right? Like we have seen in Mexico and Canada's case. And so the likely number for each country is probably going to be somewhat higher than what the pure sort of product level matching of the tariffs would suggest. And then there will be room for that to get negotiated down.
So on a weighted average basis, tit for tat, reciprocal tariffs, 11% could be the number. Again, this is all in the possible. This is more than anything else a thought exercise. Yeah. But if you throw in VAT, etc. as well, the number could be actually meaningfully higher than 11%. It's possible.
It's possible, yes.
And the way, Sunil, as you also sort of explained, it is in a way, an opening gambit for negotiations. Is that the way to think about it? I mean, say, for example, if the number is 20%, market will be shocked. But will that then be, I mean, will they walk back based on how negotiations go?
I mean, that's exactly our expectation, Prashant, because there are a couple of things in here. One, I think if you looked at the amount of imports that these trading partners have, that's almost thrice what the imports from Mexico and Canada were. So the quantum we are talking about is quite large, which means that if they if you go by precedence, if they get sort of delayed the tariffs on Mexico and Canada by 30 days, and then they sort of had partial reduction in those tariffs for another 30 days, that just suggests that there will be sort of room for negotiation, and it won't be sort of implemented immediately in India's case, and for that matter, in most countries' cases. As I said, these numbers are sort of open to negotiation, in which case the numbers will be higher, and then there will be that sort of 30 to 60-day window, as I just spoke, where there will be sort of obviously back channel talks, and there will be some room to take those numbers lower.
And it is also possible that, instead of saying, okay, the number is 20% and then walk back from 20, I mean, they say, well, there's 10 now and 10 more coming. So that also, in that sense, perhaps could be a way to negotiate and show me proof that, well, you're willing to work with us, and then maybe. So we don't know, right, what combination and what measures and what route they use.
That's right. I mean, as I said, we are not entirely clear how it will be implemented, but just going by the prior instances with Canada and Mexico, most likely the number is going to be higher. Most likely it won't be implemented immediately on day one. They will give a window before this gets implemented. And then within that window, the numbers will be likely negotiated down with a final number, or in some cases, if there is potentially a deal, then it could be even sort of revoked entirely, as we saw with in some cases, right? So there is, as you said, there is a lot of uncertainty around how this pans out, but it does feel like the market will be somewhat negatively surprised, because the quantum of this is going to be larger than many of our investors are thinking, and it's probably going to be also pretty broad-based when it comes to different countries.
Market expectations, Sunil, are under 10% right now?
Yeah, I think on a weighted average basis, some of the recent surveys we did among clients is around sort of 9-10% on an average basis across these trading partners, not sort of singling out India in here. But that's, I think, what the expectation is, so about 10%.
Okay, all right. How are you leaning to the fact that VAT will be included? And maybe who knows, currency as well, right? I mean, they feel currency is undervalued in many trading partners. Japan has been mentioned, China, and so what's your sense? Is that?
Look, I think that's why we said the numbers could be actually much higher, because as you entirely correctly pointed out, Prashant, there is the product level sort of tit for tat sort of tariff matching. On top of that, there is the non-tariff measures. On top of that, there could be sort of VAT. And then there is the currency undervaluation in some cases, and India obviously checks that box as well, as per sort of U.S. administration. And then there is the additional news flow that they just mentioned in terms of countries that are importing oil from Venezuela. They could also be subject to additional tariffs. And obviously there are other countries, China, EU, which are kind of more impacted from that, but India at the margin is also there. And so there are some multiple layers on top of the pure reciprocal level product by product tariffs, which could come in. I think all of those things actually point to the same conclusion, which is that the initial number could be a little bit higher than what the market is anticipating, which is partly the reason that we also think that it makes sense to be a bit sort of more cautious on the markets in the near term because of this sort of impending risk.
Mm-hmm. But if it is, you and I are talking about it, and people around dealing rooms and in institutions are talking about this, you are talking to clients as well. So in a way, if this becomes the view that, well, start with a big number and then walk back, will markets react in a very negative way? Maybe we get a bit of a dip globally, and then that gets bought into?
Yeah, I mean, that's a great question, Prashant. I think the way this has been sort of getting sort of asked in our conversations is that, is April 2nd the clearing event in that sense? Is that, okay, so they announce stuff and then the market sort of looks beyond it, so now it's already announced and that's a clearing event for the markets. Our sense is that it could still be an initial shock, as I said, because the numbers will be higher than what the market is currently anticipating. And then there is a room for negotiation. There's a window for each country, in which case I think there will still be sort of uncertainty in the market. So I think the way we sort of think about it is that you probably continue to have some uncertainty related to tariffs over the next sort of 30 days before things start to get 30 to 60 days before things start to get clearer in terms of what the final tariff rate would be for each of the countries. And so I think this will be something which will be an overhang for us for the next couple of months.
You know, here in India, there have been some news reports. Reuters reported that India is looking to cut tariffs on half of its sort of, imports, U.S. imports into the country. So it's fluid out there, right? I mean, so this is also obviously a little bit of posturing. I mean, showing the other side that we're willing to work even before and preempting some of this. So any thoughts there?
Yeah, I mean, exactly as you said. I mean, as we know, the U.S. Commerce Ministry was in Washington a couple of weeks back, and obviously there have been talks with India, similar to the other countries as well. So I think it's all a part of the deal or the negotiating tactics, as we just mentioned, Prashant. And so, I mean, it could very well be that, as you said, India would reduce tariffs on some of the imports well ahead of this. Or even sort of post the actual announcement, because the announcement, as I said, the implementation would be delayed, right? So India could still kind of implement these things post the April 2nd announcement. They could sort of also increase the purchases of sort of defense, energy related imports from US. And so I think each of the country will probably try to negotiate, probably try to lower tariffs in some categories where it's too high compared to what US is charging. And then also sort of increase some of the spending in areas of defense, energy, which US is keen on. And so all of this will be probably part of the countries showing US that they are willing to work with US and come to a more reasonable deal.
Is it possible to form a view on the markets with all of this uncertainty? Do you have one? The 1st of April, we'll also have these middle-class tax cuts which come into force, effect perhaps a few months later. 9th of April is the RBI, maybe a rate cut. What's the view on the market itself here?
Look, I think, Prashant, as you may recall, so we had sort of downgraded the market from overweight to market weight back in October, so about 6 months back. And the view there, and it was largely on the back of the cyclical growth slowdown, right? So fast forward, we already seen markets have come off, valuations for the large caps have come off. But our general sense is that on the domestic side, your growth has kind of bottomed out, but it's still sort of going to be a gradual recovery in here. You still have policy, especially on the fiscal side, which is somewhat restrictive. We still have earnings cycle, which is still seeing more downgrades than upgrades. So we still think there is a couple of quarters of downgrades left. We still know that small and mid caps have much higher valuations, and the positioning there is still not cleaner, especially within the domestic funds, right? So there is still sort of more risks on the domestic side, even though I think the worst is behind us. But then on top of that is what we were discussing on the global side, which is that you have the impending reciprocal tariffs that could come and hit us, which will be with us for a while before things stabilize there. And so because of all of this, we still think it may be a little too early to take broad-based exposure in the market. So we are somewhat sort of cautious in the near term. I think we are kind of much more sort of alpha focused, looking at companies and sectors where you got sort of higher earnings visibility, more stronger balance sheets, and sort of more quality bias. I think that's how we're kind of leaning within our sector allocation.
Okay, all right. That's a conversation that Prashant had with Sunil Kaul, Goldman Sachs View, coming in over there. Well, let's now put the spotlight on Ashok Leyland. Ashok Leyland yesterday announced that they'll be closing their Switch Mobility UK plant. To talk about this and, of course, other concerns, the bigger concerns around the extent of promoter pledges that were announced yesterday. The promoter entity has created a pledge, I think, worth over 6,000 crores just yesterday. We have Mr. Shenu Agrawal, MD and CEO at Ashok Leyland, joining in. Mr. Agrawal, let's actually start with the news first, which came in yesterday. You announced the consultation process for closing or restructuring of this UK facility. Just tell us what led to this decision, what are the kind of losses this unit was making, and I think you've invested about 2,500 crores so far in this UK facility. So what happens to all that?
Okay, so firstly, thank you for having me. Listen, yesterday, like we announced, that Ashok Leyland had been committed to the UK market for about 15 years now. But in the recent past, what we observed was that the market variations were just too much. And also, we could not come up with a very competitive cost structure to be able to serve the market in the right manner. We had been making losses in the UK for many years now. And after having tried several things, we have taken a decision to start this consultation process, which might lead into cessation of the manufacturing and assembly activities in the UK. Of course, we are not exiting the market. There are two things that we are working on. Firstly, we do want to continue to support our customer base in UK by providing all aftermarket services. And the second thing is also we are trying to identify an alternate location for manufacturing of these products that are that would be destined for UK and for Europe. As far as the losses are concerned, in the recent past, we have been making about 2 to 3 million British pounds of losses every month. Now, the number varies depending on how much orders we have in hand and how much we can fill up our capacity. But that is the broad range between 2 to 3 million pounds per year. And of course, once this consultation process is over, and we have complete clarity as to which way it will go, we think that most of these losses should be behind us now.
Point taken. Mr. Agarwal, if you could talk about the timeline of Switch UK Mobility, the whole consultation process and the total cost you would likely incur.
Yeah, so see, what we are estimating right now, although the final number will come once the consultation process is over, is one-time closure cost would be somewhere around 5 to 10 million pounds.
All right, Mr. Agarwal, for Switch India, as I understand, you are all set to turn EBITDA positive in FY25. By when and how do we see the company turning PAT positive? And if there is any further cash inflow likely?
So yes, like I said, Switch India is expected to be EBITDA positive within FY25, and now FY26 is actually looking much more promising. We have a very large order book in our hand, which is 1,300 plus buses we have orders for. Also, on the overall volume for buses, we think we should be able to treble that in FY26. On LCV also, although last year was the first year of the launch, but we did cross the number of 1,000 units in FY25. So that number we are hoping should also double or more than double in FY26. So it is, Switch India is moving on a very good path. We are focused on bringing this company to PAT break even, so it stands on its own legs, and that we think should happen within next 4 to 6 quarters.
Okay. Mr. Agarwal, at some point in time, considering that you're talking about a lot of the growth expectations here, would you require to raise any money, to perhaps further invest in this business?
Yeah, that is our plan in the medium term. But right now, as you know, the evaluations for the EV businesses are not very good, right? And therefore, and we are not in a hurry to raise any external funds because, like I said, company is doing fairly well. Their cash requirements are minimal, right? We don't foresee any significant amount of equity infusion for Switch India also in the near future. So we are not in a hurry at all. Ashok Leyland balance sheet is very strong. After many years, we are a negative net debt company now, and we hope to improve that situation by end of this quarter and going forward. So yes, but within a 2-3 year time frame, we will decide whether we want to go through a private public placement to raise some funds, or we want to go for straight for IPO.
Absolutely. Mr. Agarwal, last evening, there's been a disclosure of promoter creating pledge of 30 crore shares. I'm asking there's concern in the market regarding the pledge and whether impacts Ashok Leyland, whether this is for meeting IndusInd Bank's fund requirements. Have you had any communication with the promoter in this regard? What have you heard?
Listen, firstly, I think you are asking the wrong person, but what I would say is that the Hinduja Group has many businesses outside Ashok Leyland, right? And many of these are doing very well. Secondly, I would say that, we are really not privy of the matter as to what is the usage of these funds. But of course, if we get to know more, we'll be very happy to share with you. And finally, I would say that, during various interactions with the promoter, we have found that they are more than committed to the success and growth of Ashok Leyland. Many times we have been into discussions with them as to how Ashok Leyland can move forward in fulfilling its vision of being in the top 10 global CV players. So I can assure you that they are fully behind the company.
All right, Mr. Agarwal, we'll have to see how things pan out for now. But thanks a lot for joining in and speaking to us here on CNBC TV18. Well, let's get back to the markets then. We've seen a good recovery from the lows. We had a bit of a dip in the first few minutes of trade, but that dip got bought into, and the Nifty Bank, we pointed this out earlier today, that given the global uncertainty, if we need to see a pullback, the Nifty Bank needs to perform. That's precisely what's happened. Mitesh Thakkar joins in back on the show. Hi, Mitesh. Buying the dip has worked today. Levels you're looking at on the Nifty Bank, and also a fresh couple of picks?
I think, as I said, the bias and the trend was on the upside. Now, I think, this low which is there on the Nifty was around 23,412, and I said 23,400, 380 might be a very difficult level for the Nifty to get below because the structure is positive and we've had a good retracement. So that level is held. That confirms that 23,400 in the near term should be an important reference point. And with this bounce back, I also further mentioned that, we might retest the 23,750, 800 zone. So I'll maintain that bias. With that, I have two banking names on the buy list, Bank of India and Bank of, I think both are looking very good. Bank of India is a buy with a stop at about 105 for targets of 112. And Bank of Baroda as well is a buy. Keep a stop around levels of 224.5 and 224 maybe, and look for a target of 236.
Absolutely. Mitesh, stay with us. We're going to come back to you for more questions in terms of specific stocks. The big loser, of course, and the Nifty is Tata Motors. I mean, Tata Motors is down almost 6. The next biggest loser is Dr. Reddy, which is down barely 1.5%. So reacting to that auto news. Samvardhana Motherson is the other one, which is reacting at the broader space as well. Let's revisit these. Sudarshan is here with what he's learning and understanding. So over to you.
So most of the auto stocks are under pressure, but amongst all these stocks, two stocks that are seeing a big fall are Tata Motors and Samvardhana Motherson. It's on the back of announcement by US President Donald Trump, who has announced that there will be 25% tariff on all the cars that are not made in the US, and also has talked about auto parts. Tariff on auto parts, and these tariffs would be effective April 2. Now, why Tata Motors is in focus? Because US is one of the most important markets for JLR, and North America forms nearly one third of total sales of JLR. And the most important point for JLR is that it does not have any production facility in the US. So all the JLR cars which are sold in the US are imported from other countries like UK or other countries. Now, why Samvardhana Motherson is in focus? First, it generates nearly 20% of its revenue from the US. But for Samvardhana, the important point is it basically supplies auto parts to those companies which export cars to the US, and those cars might be impacted, and indirectly it would impact Samvardhana Motherson, which comes around in the range of 6 to 7%. That's the reason you are seeing a big fall in these two stocks.
All right, got that. Sudarshan, thanks very much. So that's the auto impact that's playing out. Let's focus also on NBCC. Remember, NBCC announced a very big order win along with the Maharashtra entity spread over several years. Vivek is here with the details. Vivek?
Well, that's right. It's a very interesting development that NBCC yesterday updated the exchanges. So what is it that they've done? Yesterday they said that they've signed a memorandum of understanding with Maharashtra, Mahatma Phule Renewable Energy and Infrastructure Technology Limited. Now, this is a collaboration between NBCC as well as Mahapreet, as it is known as. This particular collaboration is to jointly develop as well as undertake consultancy, fee-based EPC as well as renewable energy projects. With this, NBCC now enters the redevelopment project arena as far as the state of Maharashtra is concerned. So what are the projects that they've targeted so far? It's the cluster development project in Thane. Data centers is something that this particular platform will look at, renewable energy initiatives, as well as slum rehabilitation projects in MMR, which is the Mumbai metropolitan region. Along with that, they will also be looking at residential products under the Pradhan Mantri Awas Yojana. So NBCC yesterday has informed the exchanges that the total scope of all of these projects is close to 25,000 crore, and these projects, once they do get the orders, is expected to be executed in the next 3 to 5 years. So what we need to watch out for is the exact scope of work, what are the projects that come into place, and what will be NBCC's share as far as the entire 25,000 crore pie is concerned. But nevertheless, the stock is up on the back of this particular announcement.
Vivek, thank you very much for that 3.5% high. Wipro is the next one. Rima has got more. Rima.
Well, it's a mega order win for Wipro, which has boosted the share price today. So the company is won from UK's insurance company called Phoenix Group, a 500 million pound order. That's about $650 spread over 10 years, which means approximately, simple math will tell you it's about $65 million of incremental revenue, and that's pretty sizable. According to analysts, that could add about 0.6% in terms of annual revenues. But remember, TCS also has an existing partnership with Phoenix Group, and what we understand that both Wipro and TCS will be servicing Phoenix Group. But it's a big mega deal for Wipro, and that's got the street excited. Back to you.
Okay. All right, Rima, thanks very much for that. A couple of IT names in focus there. We've got Vivek back in to talk about the impending nifty regime, the inclusions, exclusions, and of course the fund flows that can be expected. Vivek?
Well, it's the last Thursday, and it's expiry. So on the back of that, also remember earlier in Feb, the NSE Index Committee had said that there would be changes as far as the constituents of Nifty 50 are concerned. They announced a whole raft of changes for the other indices as well, but we are focusing on the Nifty 50 changes because this means that today a whole host of passive funds will be forced to make these changes on account of their changes that will be effective tomorrow on the Nifty 50. So what comes into the Nifty is Zomato as well as Jio Financial come in. IFL Capital desk actually estimates that Zomato today could see inflows of close to $421 million. Jio Financial could see inflows of close to $221 million. On the other hand, what makes way, both the BPCL as well as Britannia will be out of the Nifty. So BPCL a little over $160 million of outflow, and Britannia over $170 million of outflow. So expect these changes to take place in the session today.
Okay, all right, Vivek, got that. Thanks very much. By the way, look at the market screen. We started with such negative news, right, on the global front. But that's what we were saying, that the local news flow is very strong, both on FPI flows, on corporate action, corporate commentary. And look at the market now. The Nifty is sailing away, morning highs on the index, 108 higher. The Bank Nifty continues to lead from the front. But aside of the Bank Nifty as well, there are lots of other stocks, Hero Moto, L&T, Wipro, many names beyond the financials that are doing well. Reliance itself up about 1%, Trent. So it's a very green-looking screen this morning.
And the interesting thing is there is nothing extraordinary. If you just look at the Nifty top gainers, right? I mean, the gains are all 1%, 0.5%, 0.75%. So no 3, 4, 5%, no outsized moves anywhere, especially amongst heavyweights or, not heavyweights as well. It's just that broadly everything is up. You've got just about, 10, 12 names which are lower. And what is down is also down 0.5%, 0.25%, except Tata Motors, which is down sharply. So, it's the bulk of Nifty 50 names which are higher. Small gains, but most of it up. And I think that's essentially causing this nice lift which we have in our hands, about 120 points or so. Market breadth, I hope it also picks up, right? I mean, we've just flipped into the green. 1,300 stocks are higher and 1,250 stocks are lower on the NSE. So still close to 1:1. And we'll see how this one progresses as well. I think more on markets in a bit, but it's time for another quick commercial break here. Manisha is going to be with us for some commodity chat on the other side. Stay tuned.
Welcome back. Let's put the spotlight on the commodity markets now. We have Manisha joining in. Manisha, morning. So what's catching your attention today?
Well, I'm looking at the gold prices right now because we are trading very close to those all-time highs yet again that we hit in the month of March at $3,057 an ounce. So holding around that $3,020 to $3,040 in the last couple of sessions now. What is important is that you have seen gains in the gold prices come ahead of the U.S. reciprocal tariffs that take place on 2nd of April. And then the U.S. Fed speeches, many of them in this week, is something that will set course. Even as we have seen a bit of a gain from the U.S. dollar index, the gold prices have continued to be in the positive, but that clearly has been the situation for most of part of this year. Interestingly, you have various reports now suggesting that the gold prices can go much higher from where we stand right now. The latest has been from Citi. We spoke to them on the channel yesterday, and they say that their base case scenario for gold is $3,200 an ounce in the next couple of months. And if there are more tariffs and the global economic slowdown concerns go higher, then $3,500 an ounce on the higher side is what they're anticipating. Bank of America also came with a report yesterday. They are putting gold as an average price of $3,063 an ounce for this year, and they're anticipating gold at $3,350 an ounce in 2026. But Bank of America also says that the investment demand, if that goes up by 10%, then in next 2 years, you could be looking at the gold prices trading at around $3,500 an ounce. So higher highs coming in for gold prices from many of these banks and brokerages. And then, of course, you have ANZ talking about $3,100 in 3 months and talking about $3,200 for the next 6 months as well. De Beer Group has talked about $3,300 an ounce for gold. Goldman Sachs and BNP are putting forecast at $3,100 an ounce. And Macquarie has spoken about $3,500 as well in the next 12 to 18 months. So very bullish cues continuing in case of gold prices. And we have seen buying happen on every dips for this commodity.
All right. Thank you very much, Manisha, for that. We'll take a quick commercial break here. We're going to come back. It's our special Indianomics segment, Lata in conversation with Adesh Srivastava of Global Trade Research Initiative. They talk about what could the shape, size, extent of Trump tariffs on the 2nd of April look like.